Happy Good Friday, Dan here. I want to give you a little fresh air, a little bit of certainty in an uncertain world, and make sure that you have a great Easter Sunday. So I want to get you on my side, see what I'm viewing because I'm mostly bullish, and there's a couple different reasons why. First of all, at Portfolio Boss, we don't think in terms of bull or bear because we can be hedged. And so let's take a look first of all and see if we're long and strong, how much hedging is going on, and I'll do that through this trade plan here. You can see that at the very top, there's three different ETFs that were hedged in, and so that's about close to 30% hedged. That's on the low side the past few months, and that's one of the reasons why, by the way, that this is at the end of the day, people ask like, why are you hedged and you're long, and like because that's what smooths out the results, dude. It's when you have a black swan event like Thursday, Friday the other week was 100% a black swan. The markets were not ready for it. Luckily, as I'm going to show you, the smart money was positioned in a certain way because my thesis on the markets and how they really work is it's not news driven. What's more important is under the surface, the plumbing of the markets, and how and who is positioned in what. So we'll talk about that just in a second here. But when you have a Thursday, and on that Monday, I wrote on Twitter. Just I like having it's for my own edifice. I want to go ahead and have kind of a record of my calls and things. And so on X, I said, "Hold your nose and buy." And yeah, of course, that was the bottom. So all these people that do this averaging down nonsense, that's not an edge, by the way, such as martingale strategies. Hey man, that is not an edge. You're going to blow up. And then most certainly last year, a bunch of whole business blew up actually with because of the yen when there was a black swan in the yen, and then in the major indices in the S&P 500, that Thursday, Friday wiped out a bunch of traders that averaged down with their day trading. And come Monday, they were forced to liquidate. It was obvious as day to me. And so that was the bottom, and people knew it, and then that's why it went straight up after that. I've been saying this ad nauseum. The biggest down days are followed by the biggest up days. Okay, so everything that I preach to you and I tell you is through actual testing and research. I don't know how many other people have spent over $6 million on machine learning tools, but I certainly have. What a deal that you're getting this information for free right now. So, hey, cool. But yeah, when you have a black swan event, it's basically whoever loses the least amount of money during that period of time. I'm not looking to make a whole bunch, but now I am, now that I think the bottom's in. And so I'm suspecting that we're going to see April. It's not over. We're halfway through. I think that it's going to be green for us, but we'll see at the end of the day. But let's look at the smart money, and this is going to paint a better picture of why I'm bullish on the markets. You see, in 2008, these people, let me show real quick here. These small speculators, they're non-reportable, smaller traders. They're selling like crazy, and like a broken clock, they've been right. Broken clock is right twice a day. They've been right throughout this decline. The terrible bearishness, 8 weeks in a row now of above 50% bearish, which is, I guess, a new record. I don't put a whole lot of money or faith or whatever or weight into sentiment because we tested it with machine learning and it didn't produce any alpha, not above any price-based indicators whatsoever. So, but interesting nonetheless. And so many bears, people that have been bearish since 2020 came out of the woodwork, and then they're bearish as ever. I'm like, dude, you just missed the entire AI boom, which is crazy. And then now that they're right, it's like there's a part of me is like, oh, I just hope that they get stomped into the earth and this thing rockets upward, which it certainly might. This to me is what bottoms are made of. But I would love nothing more than to see this thing ping pong back and forth as it goes higher, in anticipation of some crazy things that are coming down the pike with AI. It ain't over, man. This, yeah, you're going to see co-workers are going to be AI, especially in anything to do with software. And $3 billion was bet by SoftBank on this, and so by 2026, they're going to have. It may even be sooner than that, but you're going to have at least PhD level computer programmers is coming, and I don't doubt it. The IQ, by the way, it looks like it beat me. So I think we're close to 140 IQ is the estimate on the new O3 model. O3 full version got released on OpenAI the other day, and I guess it's pretty smart. It took an IQ test, and I've seen some crazy demos with it, man. I'm like, okay, this is just like what happened with Jeopardy. It's just like what happened with Go. It's just like what happened with chess. The machines just started beating everybody. And it doesn't do every task really well, but the tasks it does do well are genius level already, man. So it's coming. It's coming. It's not going to be stopped. And so I would love nothing more than all these stocks that got rocked to come right back. And like you saw, we're positioned long and strong with just about 30% hedging, and that's kind of that varies from day to day. And let's look at one more smart money bonds. A lot of people have been talking about bonds falling apart too. I'm like, oh my gosh. Uh, you remember 2020? Just to round out my thoughts on the stock market, there was that V bottom in 2020. That's because the smart money was positioned correctly. And you have all these small speculators selling like crazy. That's the exact same setup that happened in 2020. And then the reverse in 2008 when they were buying like crazy and they didn't see what was coming with the collapse of Bear Stearns and things like that. I didn't see the collapse of Bear Stearns either, but my indicator sure did. So I just followed those. Bonds, buy signal. It's been on a buy signal for a long time. You can see a huge divergence now. And this is the opposite, by the way. If we look, I'll set this to line chart there so you can see it correctly. There we go. That's on a buy signal. And I said that on Twitter as well. I'm like, buy. Like, you saw this forced liquidation over here. And I don't even care what they were talking about in the news. I think someone said, "Oh, it's Japan selling our bonds or whatever." Look, at the end of the day, when people are forced to liquidate, let's say that you have a business that does import export with China or something, you're forced to liquidate your most liquid assets right now. You're not going to liquidate your house. You're going to liquidate stocks and bonds and maybe some other asset classes, maybe some Bitcoin or whatever, because you're forced to. There's a guy at the gym that's like, I think he's in the hole like 2 million a month. He needs to pay for payroll, and then he's got all this inventory and shit, and there's nothing selling, and so of course he's forced to liquidate his some of his stock holdings because of a situation like this. But this too shall pass. But you can see that this is smart money, by the way. This smart money, when they start accumulating, that means you buy. So this strategy is exactly the opposite of the other smart money indicator for the stock market for the S&P 500. And so it's a great time to be buying bonds. So I suspect that interest rates will go lower, as this is a deal. This is a deal as far as I can see. So again, that's my job right now, is to give you a little calmness, a little certainty in an uncertain world. I hope you have a great uh, man. This is nice. This is gonna be a nice late Easter, really late in April here. Have a great weekend. And I hope you're nice and refreshed and ready for Monday. We're going to be doing some trading. I don't fully know all the positions yet for Monday because we don't get all the quotes, but I will give you this last little great ray of hope. Let's look at Nvidia. This strategy has just been on a tear right now, and it's long and strong Nvidia. That stock has been pummeled a little bit of late, but the strategy is up 21% in April. You can see that little line up there. As the markets were falling apart, this thing was timing it just to the T. I wish every strategy was like this, but that's just not how it works, unfortunately. We have to have some reality and not fool ourselves. But this strategy bought at the low and sold pretty close to that swing high, and then bought on the open on Thursday. This is the number one most talked about, most widely held retail stock. And so if this is a harbinger of what's to come, that would be amazing. So anyway, happy holidays. I'll catch you next week. It's Dan signing out. Peace.